It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Thursday evening, June 25th, 2015. Got a jam-packed newsletter in store for you guys and gals. Wrapping up here. Last couple drops of the month of June. Tomorrow's Friday. We've got to be ready for Friday. Summertime Friday coming up. And we got a bunch of trading opportunities waiting for us here. And, of course, soap opera continues on Greece. We got a lot to talk about tonight. Before I jump into our newsletter charts for this evening and give you guys some strategies for tomorrow, I want to remind you of a couple things here. First, everything I talk about today in the video, I teach to all of our students here at schooloftrade.com. Check out schooloftrade.com. Get a great free trial. I'll show you more on that later on our video here tonight. Also, please make sure you're watching this video on our trading blog here at sidewaysmarkets.com. In addition to all of the other great resources that we give you guys here at Sideways Markets, there are 3 specific reasons why I think you would enjoy watching this video on our trading blog. 1, you can download all the charts I'm going to use in tonight's video by following that link right below the video on our blog. 2, if you're not a member of School of Trade, I'd love to give you a free pass. Come out and test drive our live trade room as a guest, upper left-hand corner, and of course lower left-hand corner right above my ugly mug. You'll see a spot to join our nightly newsletter mailing list. All I need is your name and your email address, and I'll shoot you over an email every evening right around 8 p.m. Eastern Time when the nightly newsletter is ready to be viewed that evening. So make sure you're watching this video on our trading blog. Download the charts below the video, grab your free pass to attend our live trade room as a guest, and of course register for the newsletter mailing list. Just a reminder, if you register for the mailing list or you grab your free pass, make sure you check your inbox, check your email, because I'm going to send you a verification email so I can keep sending you emails in the future. Ready to rock and roll? Helmets on, seatbelts fastened? Oh, I got the mouth guard. Well, no. Hopefully, I don't have the mouth guard in tonight. I got to talk, but make sure we're ready here, though, because we got a jam-packed newsletter in store for you guys this evening. Let's jump right in here. The funny yellow metal, that gold futures, the GC. Boy, a little bit of a sleeper here on gold today. Get the spike in channel. Remember we talked about last night. We've got to get some sellers engaged, and the only way we're going to get sellers engaged after that spike in channel, if you didn't watch last night's newsletter, you owe it to yourself. Go back, watch last night's newsletter, or just wait for the end of this video, and it'll go right into last night's newsletter at the end of this video, right? It just plays in a loop. So last night's video, we talked about the spike in channel. I'm not going to repeat it again in tonight's newsletter, so go back and watch the one from yesterday if you didn't, especially the part on gold where we talked about the spike in channel yesterday. Spike in channel says strength. All the chips are in the middle of the poker table, right? Talked about this last night. Only way to get this price to continue going lower, one of 2 things has to happen. Either something new needs to show up, right, such as a deal out of Greece, such as major economic news, political disaster, whatever the case may be. So A, something new has to happen. You know, we've got consumer sentiment tomorrow morning. Maybe that's what it is. Who knows? But we know that there's something new that has to come out here that has to shake up and engage these sellers. The other scenario where we go lower is as these sellers that are already in this market, right, they're sellers who sold up here, sellers who sold on the way down, they need to cash their paycheck, take their profit down here, and that'll result in price going higher before it goes lower. So gold is bearish, but oversold at the completion of the spike in channel, so we expect a correction off these lows before getting the next push lower. Buyers, you guys have the short-term opportunity right now, and sellers, you've got some easy spots to wait for overhead. Now remember, if you're a bear right now, we're not blindly selling these resistance areas overhead, are we? No. What are we looking for? 3 opportunities to sell at those resistance areas. What are they? They would be a reversal pattern. They would be a failure pattern. Failure by who? Failure by the buyers. And what's the third one? Wait for the continuation after it makes the turn. Those are the 3 ways that you bears are going to look to sell those resistance areas. We're not blindly selling those red boxes. That would be a little bit fool. Well, let's put it this way. If it was that easy, then there wouldn't be any money left to make in these markets because everybody would be doing it, right? So we're going to go out. We're going to wait for this price to get up, and then either reversal pattern, failure pattern, or just wait for it, start making the move down, and then sell those rips on the way down. I have some definite targets waiting for you bears down here at the range low, at the low of the trigger zone, and then a major range low at 43.5. Those will be our targets. I'll tell you though, it appears they're waiting on Greece right now, and I think the next deadline they said this afternoon was on Saturday. Apparently they do work Saturdays in Greece. Hasn't that been the whole concern the whole time, right? God, I love those salads, man. Those Kalamata olives. Ooh, man, can't. I'll tell you right now, it's worth making the trip just to get the food there. It's incredible. Anyways. Bottom line, as you can tell, I'm a big fan. I'm a big fan of the Greeks. So we know that we've got a bearish market. Buyers, you guys have some short-term opportunities, but remember, it's all going to be a scalp if you're a buyer right now, which means look for some quick profit target, tighten up that stop, right, and hold on as much as you can get it here, but don't try to be a hero here if you're a buyer right now. Also, if you want to be a buyer, if you're a bull right now on gold, right, for whatever reason, you'll look for sellers to try and fail. Right? So bulls, you got to get to it fast, or you got to wait for those bears to try and fail at those resistance areas overhead to buy right into their stop losses. Sellers, I hate to break it to you guys, but we got to stay patient right now. We really got to stay patient if we're a seller. Unless we see a tremendously strong push lower, and even then we're going to run into that 68.1. It's going to be a difficult thing to sell short below that. The best way to sell right now is going to come after a correction, and now you know the plan here for the gold tomorrow. Let's keep going. Moving from the gold, from that yellow metal to the black gold, the crude oil futures, the CL. This is the 815 contract here on crude. We're going to be here for another month on the 815 contract here till the middle of the month, next month. Crude is trading at the lows of the price wedge. Surprise, surprise. So we'll stick to our plan from earlier this week, selling the highs, and now looking to buy these lows, right? Had a great opportunity earlier this week to sell the highs. That worked out flawlessly. And now here we are down around these lows, and we're going to be looking to buy these lows. How could I buy these lows? We just talked about it on gold. What are those three scenarios again? There are three ways that you bulls can buy these lows. What were they again? Right, a reversal pattern. That's one way to do it. Right, a failure pattern. What would be the failure? The seller failure, right? What's the other one? Or the continuation, but how do we get the continuation? It's going to start going back up now, and then we buy those pullbacks on the continuation. The reversal pattern, members, you want the 3-point reversal we talk about in the intermediate course. Failure pattern, members, you want the second failure, right? Remember, wait, try once, try twice, and whoops, buy right into their stop losses. Remember, human beings, we love to try things twice before giving up on stuff, right? Remember when you were a teenager, you tried that alcohol with the gold flakes in it, right? Remember that? You probably tried it twice before you gave up on that, right? Was that just me? I'm kidding with you. I will not quit my day job, though. My days in the comedy club are few and far between. All kidding aside, though, if you do wait for the turn here, right? If you do wait for the turn, just make sure you stay away from the middle of this range, right? The one thing that I remember Mama says, right? Don't fiddle with your middle, Joe. Stay away from the middle of this range. You want to be buying the low and selling the high, staying away from the middle, right? Hold those trades through the middle, right? Let it do its thing. So right now, I'm looking for a reversal pattern down here. I'm looking for failed sellers down here, or I can wait patiently for the reversal, right? And then buy those dips. Now, what if we wake up tomorrow morning, we've already made it even lower, right? I mean, heck, we got a relatively heavy market right now on the black gold here. We get an ABCD down here. Right, we get a measured move, 58.78. That's another spot. Now, guys, remember, this is ideal, right? The ideal scenario is on these price wedges. The real ideal scenario here is you find those swings. You find those swings, right? I mean, I would love it if it was as easy as just buying the lows of the wedge, but sometimes it goes a little bit lower, right? So find the support level down here. Sellers try once, sellers try twice, buy right into those stop losses and take it back up. So don't be surprised at all if this market pushes a little bit lower here just to give those bulls a little bit tastier price to buy at. Remember, the lower this price goes, the more appealing it becomes for the buyers in the market right now. So as it goes lower, we will be waiting here for the same thing, right? So keep an eye on 58.78. Keep an eye on this little range low, 58.33, and boy, if it does happen to get as low as 58 here, now keep in mind, this is crude we're talking about. Now, I know this is June, and for whatever reason here, this month of June's been a little bit, well, not a little bit, it's been quite range bound. You can see it, right? Here's June 1st right there. I mean, we've just been going sideways all month. So let's be honest here. 59, we'll call that 59.5, down to 58. It's only $1.50 down. This is nothing to sneeze about, right? I mean, we could be down at 56 here tomorrow, and I wouldn't even print that out and put it on the fridge at home for mom, right? So we know a $2 to a $3 move is really what we're used to historically here on crude oil. So there's absolutely no reason why Draghi says something, Yellen says something, who the heck knows, right? Maybe Donald Trump jumps on the microphone again, unscripted, like he always does. You gotta love that, right? Hope more politicians just jump in front of cameras without any teleprompters. Anyways, we know that we're looking for this price down here to reverse and give us pretty much the same thing. So as this price goes lower, be very suspicious of these moves out of this range here. I really don't think we're going to get much long-term change on this. We got non-farms next week. We've got more out of Greece next week. I can't wait for this thing to be for Greece to be out of our hair here right now. I'm getting a little bit sick and tired of that dominating everything that is the news media right now. But that is the world we're living in. Can't change the game. Got to play the game, and that's how we're going to play it. So we know we're going to buy these lows, and again, right now, the plan is up to those highs, and then can you guess what we'll do at the highs? Look to sell those highs, right? So looking for reversals, right? 2-time failure for the sell. Very, very simple strategy right now on crude. The hardest part is going to be resisting the temptation to sell short right here. And also, if we do end up sitting inside this middle, not fiddling with that middling in tomorrow's session. Also, don't forget, tomorrow's a summertime Friday. That means early in and early out on gold, crude, pretty much all the markets talking about tomorrow. Early in, early out. Grab some sunblock, a hat, and some water, and go have some fun tomorrow afternoon, right? Take the kids to the beach. So, next up here on the Emini S&P, the Emini ES, boy, I mean, we kind of called it. The horn's out. We're tooting the horn right now. I mean, we definitely played this one like a fiddle. Just like I said, remember this from yesterday, right? There was your trading range, right? Remember this trend line yesterday? Go back and watch last night's newsletter, and you'll see exactly what I'm talking about. My exact words were, buyers, you've got it short term, but then look out for those sellers to come right back down in, and that's exactly what happened. So completely nailed this thing in last night's newsletter. Hopefully you were able to make a quick buck off it with me today in our trading session here on the S&P. Really, the S&P was the biggest mover of the day today. I mean, you don't hear me say that very often, right? The S&P, I think, had more range than crude oil did today. So it was definitely a mover and shaker today, that E-mini ES. As you can see, we're definitely range bound, and I got to warn you here for this one. This has potential of being a very challenging scenario tomorrow. Let me remind you, okay, the S&P is one of the most challenging markets when it comes to trading ranges. This market is built to take your money and kick you out the back door right before you go home broke. This is a market that is dominated by very well-capitalized, intelligent human beings and corporations. So here's a really good example, right? So you can see there's a lot of drawing in this chart here. Bottom line is, even the S&P is bearish, but we're trading at the lows of the short-term bear channel. Okay, short-term bear channel. Look where we are, right down at the lows here. Okay, now remember, we talked about this last night, right? Remember what happens at these channels? What's going to happen? Rotation, grasshopper, rotation, right? So here we are down at the lows right now. We expect it to rotate back to the highs and then back to those lows and right, high to low, low to high, et cetera, et cetera. rotation, right? So we're expecting this now to rotate off that low back up to these highs. Okay, no guarantee, but I will definitely expect here there to be some bargain hunters from the buyers and there to be some profit taking by the sellers because we're just a few ticks away from that sell target, which is the ABCD measured move. So in all reality, we may grind lower a little bit here, right? We may push a little bit lower down to that 89, not 89, 88 area here. But again, this is a really difficult spot to be a seller right now. Okay? So we're at the low of that bear channel. I want you to make note of that because that's one bullish clue for tomorrow. I know we're in a downtrend right now. I realize that. But we have a big bullish clue right now. Let's talk about the next thing here. The next thing here we see is this trading range. Now, this is one of the most common mistakes that I see new traders making. Heck, I made this mistake for the first 5 years of my career, right? This is an easy mistake to make. What do we see here? 1, 2, 3, triple top. 1, 2, 3, 4, quadruple bottom. Moving average flattens out. This is a trading range. Now, what do we know about a trading range? We know two things about a trading range, and we talk about this in our intermediate course. We also talk about this in our free trial. What do we know about a trading range? One, we know there's a directional bias. The direction leading into that trading range is the directional bias. Are you starting to get what I'm saying? Are you starting to smell what I'm stepping in here? Yeah. Okay. First thing is we know about trading ranges is there's a directional bias. Second thing we know, are you going to finish my sentence here yet? If you've been watching my newsletters, you probably know exactly what I'm going to say next. You can't trust the first breakout. You can't trust it. That first breakout is untrustworthy. And look where we are. So I want you to look at this range right now, and I want you to think about this. Remember, we had one bullish clue from being at the low of the bear channel. We're going to rotate off that low. The second situation we have is a trading range. And that trading range gives me two more clues. One, what's my directional bias? Bullish, right? Look at the move going into the range. It ain't bearish. That's a bullish clue. The second aspect of the trading range, you can't trust this darn breakout, right? You can't trust that breakout. So what usually happens is this becomes a trap. This is a classic example of a bear trap. So dot the I, cross the T, right? Carry the one, and off we go. This is a bullish move waiting to happen. Now, there's no guarantee, right? So what am I going to do here? Well, what I like to do is, and many of you probably know what I'm going to say next, what I like to do is I like to wait for the sellers. I basically like to make my money by looking for opportunities where the uneducated traders are losing money. Why? Because when they get stopped out, I'm going to get easier profit targets filled when I'm buying into the stop losses of the sellers. So how do I do that? Well, wait for the sellers to try once, try twice, and then where's their stop going to be? Think about it. Think what you would have done before you started watching my newsletter. What would I have done 10 years ago? Right? I've been doing this almost 15 years now. What would I have done 10 years ago? I would have placed my stop right there. And then I would have thrown my keyboard, right? I would have thrown my keyboard. That's why I have a wired keyboard now. Those wireless keyboards just are too easy to chuck across the room. Anyways, not that I endorse that or anything like that. But I would see it stop me out, right? Stop me out and then go without me after I'm just spitting vinegar, right? Okay, so we know right now in the S&P, we've got a plethora of bullish clues in a bearish move. Wait for the sellers to try and fail and buy this sucker back up. You got to get to it, though, early because you don't want to be buying into that high of that channel. Now, are you ready for the real fun? Yeah, because that's where the real fun happens. So now what's going to happen is, and like I said, this is and guys and gals, if there's one market that I would never encourage a new trader to start on, you're looking at it right here. The S&P, like I said, it's filled with the LeBron Jameses of the trading industry, right? I mean, if you're trading the S&P, I'm not talking about trying to trade the S&P, but if you make a living by trading the S&P, you have earned the respect of everyone else in the market, right? The hardest part about trading the S&P as a new trader is it moves so darn slowly, it just makes you wait the whole time. That's hard to do as a new trader. Most new traders think it's a casino, right? Just walk in and pull the lever. That's not what happens in the S&P. You have to be very disciplined to wait patiently. And then once the opportunity comes, you've got to be very good at picking the right spot. Okay? I always tell people, if you're looking for an E-mini market to start on, try the Dow, try the Russell. The NASDAQ's a little bit herky-jerky because of the tech stocks, right? There's always something going on with tech. But the S&P would be my third choice for a brand new trader. Make it a goal of yours to work up to the S&P. But I'm telling you right now, though, this is one of those markets that's built to take your money as a new trader, if only just because you can't simply wait long enough to push the buttons every day. Now, here's what's likely to happen. They're not going to make it that easy on us. So we're going to get a move off these lows, right? Most likely, unless something crazy happens tomorrow, most likely we get this move off the lows, right? So now what's going to happen? The sellers are going to come in because the sellers, right, they're seeing this move lower, and the sellers are going to see that channel, and they're going to want to sell these lows. But look where we are now. We're now at the low of that range. That is support, and I do not want to sell into support. So that's why I have this bear trap listed right here. So be very careful after that move goes up. I would wait for the second time the sellers try this. I wouldn't take, unless we see a dramatic clue, and I'm talking like, well, what I'll look for is for the buyers to try once, twice, and if the buyers fail, right, the second failure. Members, I'm looking at you right now. You know exactly what I'm talking about. So I would expect the price to go up because of those three bullish clues that we talked about the first part of this. Then I would expect those poor souls, the sellers, the uninformed sellers here to try once, get stopped out at the low of the range. It goes back in just in time for the sellers to go, ooh, it's going all the way back up. And then for it to make the dump next, right? Call it a double stop run, and it's going to make the sellers wish they would have slept in on Friday morning, okay? There is a chance here that we go right back to range highs here, but this is the S&P we're talking about, so it's probably not going to happen. I'll be looking for that short-term bullish move and a long-term bearish move, but be very careful here. Look for the second attempt here for those sellers because there's going to be some traps in there as you go back into that range. One other option here would be to take your profit as a bull up inside that channel high and then just leave a portion of it to run and see if you can get lucky on this and get it all the way back into that range on Friday. Remember, it's a summertime Friday tomorrow. Early in, early out here on the S&P. Did I cover it all here for you? All right, don't forget, you can rewatch this video anytime you want because we covered a lot there, and I hope you guys learned something new about that. Euro. Let's wrap it up here with another. Boy, this Euro makes me want to put my feet up on the desk, right, and listen to some Jack Johnson music, right? Whew, what a sleeper we have here. No surprise, right? The Eurozone drama continues with Greece, and we continue here to sit sideways. We have another trap opportunity. We have to look at this as a bearish market right now. So bearish, but trading sideways. Okay, see the sideways trading range. So we're bearish and we're trading sideways. Right now, sellers, the directional bias is bearish. Now that you guys are experts on trading ranges, right, directional bias is bearish, right? We're going lower into that trading range. What does that mean? That means I'm looking for bull traps as we go higher. The ideal scenario here would be to look for price to go up. Check it out, A, B, C, D, a bull trap right into that sell zone overhead. Okay, so again, directional bias is down. I'm looking to be a seller. Trading range is in play. Do not sell these lows, guys. Promise me you will not sell these lows. Okay, do not sell those lows. Wait for price to get up and sell it when those buyers try and fail at those highs. Nice, easy bull trap, and then your targets are going to be back at the low of the range, and then, of course, you've got targets waiting for you. Honestly, the next time we're going to hear out of the Eurozone is probably going to be over the weekend, so we may not see much out of this Euro until next week. Okay, believe me, I'm as frustrated as you are right now. That's all right. It's a good excuse to go visit grandma, go spend some time on your tan or whatever it is this summertime. But again, bias is bearish. We're looking to sell resistance levels and also be aware of that bull trap, right? Be aware of that bull trap up at these highs of that short-term range. And again, be patient with this Euro right now. This has been a week-long sideways range here right now in the Euro. All right, guys? We got a pretty solid plan for tomorrow. I hope you learned something with me this week. I hope you earned a little bit here with me this week. Don't forget, you can download all those charts below the video here tonight. And as always, I remind you guys here at School of Trade, we help new traders launch a career in the financial markets. We're not trying to gamble. We're not here for a hobby. I'm trying to give you a way out of the rat race and start a new career in a safe and scalable manner, right? Got a free trial here at schooloftrade.com. Check it out. I'll shoot you an invite to our live trade room. Also, while you're here, you can learn about our 3 levels of membership. And of course, don't forget, I've got someone standing by here 24/7 to answer all your great questions if you need me. Guys and gals, what a great week. What a great week. We're squeezing out the last few drops of June. I can't believe 4th of July is right around the corner. I can't believe it, right? Amen to the summertime. Guys and gals, have a great weekend out there. I don't do my newsletter on Friday afternoons. We'll see you on Monday evening, 8 p.m. Eastern time. Don't forget to share this with a friend. Don't forget to join the free trial. And don't forget, drop me an email. Drop me a comment below the video. Give me a like or a dislike. I want some feedback from you guys. How can I make this a better newsletter for you every evening? Guys and gals, my name is Joseph. Be well out there. Be nice to each other. Wear the sunblock this weekend. Wear the sunblock this weekend. All right, guys? And I'll see you guys on Monday. Have a good one. Adios, amigos. Bye-bye for now.